Yearly? I guess that's my first question. The second question is, will the PEMCO administrator or whomever we're working with, will they go over the Dodge and Cox portfolio and help select out where we should sell to reflect the least amount of loss?
The second question, and Tim, if you don't mind chiming in here, I think the thought was that we would work with Dodge and Cox and say, here's our objective as we're going through an asset reallocation. And so what we are looking at is for the liquidation of an approximate dollar amount of the stock, and to minimize any kind of realized losses that would occur during that period. So that would really be more for Dodge and Cox evaluation, and certainly we would look at that. The fee structure, offhand, I'm not recalling if there was any significant difference in the fee structure.
I don't recall specifically, but when we're dealing with Dodge and Cox and they own bonds in our name, we have to pay a third-party custodial bank some fees, and we would eliminate that need. So typically a mutual fund fees are a little higher than an individual manager, but I think they'll be offset by the bank, the elimination of the bank fees. I think what you were possibly referring to is often if you're terminating one stock manager, more stocks and bonds, and hiring another one, the new manager will look at the holdings of the old manager and say, we'll take these, we'll take these so we're not selling and recognizing losses, and we'll do a transfer of these, but you sell everything else. And that, I don't think it's so typical when we're doing what we would do here, is leaving a active bond manager and going into a mutual fund. The mutual fund would not take these stocks, I don't believe, from Dodge and Cox. They have their own
Buying shares.
Yeah. So we're buying units of participation in a mutual fund. I don't think they would be interested in entertaining getting the bond. The issue would be, as Jim mentioned, is having Dodge and Cox work towards slowly transitioning and selling the better performing ones at the best time to realize the gains and minimize the losses.
So is Mainstay, that's the one we're going out of, is Vanguard small cap, that's the only one that's available for us to go in as a small cap value? There's not a different one, so we're a little more diversified?
One of the, and we were talking about that, one of the thoughts was that given that it's an index fund, is for the time being, given the kind of the lack of fundamentals in the market, is to just go into the index fund. We recognize that at some point in the future, we were discussing the RFP process and moving forward with an RFP process, potentially selecting a new financial or investment advisor, and at that time we could look at the entire investment strategy, including that particular component, and to see if we need to diversify management within that area.
Thank you.
So to move forward, I think we're going to have to come to a consensus and vote on making this move. It's a risk management move by trimming the exposure to Dodge and Cox income and trimming our exposure to Mainstay.
To the chair, I'll support this. I was on the committee that took a look at this, but it's not for any great enthusiasm to sort of go forward with this. My concern, so I want to sort of reference this before we vote on it, is that the overall management, as Mr. Anderson just alluded to, really needs scrutiny. So after this, I would really like Mr. Anderson to sort of go over a little bit about time frames on the RFP process. This body has already voted to have a committee that will be working with Mr. Anderson on the RFP process. What does that look like? What are the components? Just so everyone here is educated on what that process is about, when we think it will take place, and how we move forward. Because I have real concerns about the overall advice we're getting and the strategies involved with the balancing of the asset allocation, and in just how we're sort of conducting business. So I have concerns about that, and I think the best way to deal with that is really through the RFP process. So, you know, I think we're doing...
Mr. Anderson's ready to go
Yeah, so I think...
to give us a quick briefing.
Yeah, and I think that's good. I'm just concerned about sort of taking steps now, given the volatility, and, you know, I'm not sure that if we leave it where it is any better or worse than moving it somewhere else. I mean, I think everyone's just doing the best they can, as you said, without the fundamentals of the market really being there. So, so I'll certainly support it, but I have some reservations in terms of how we arrived at that decision-making process through the kinds of, the conduit of information we were getting. So I just have some concerns about that. I want to voice that, but I don't have, I'm going to go ahead and support it.
Okay, do we have a motion?
I'll move. We continue on with the recommendation the committee came up with.
Is there a second?
Second.
Okay, discussion?
Just a question that covers both scope issues. Changing Dodge and Cox, phasing out a portion of Dodge and Cox and joining Pemco and Mainstay.
Correct.
Would we be better suited doing those separately so that we have reservation